Hey guys, welcome back to Land Investing Online, where we teach students how to profitably buy and sell vacant land. This is the simplest, least competitive, and most profitable sector of real estate. For more information, visit landinvestingonline.com. Join our free Discord with tons of successful investors. Come learn from the best. Again, guys, please like and subscribe to our YouTube channel, Spotify, Apple Podcasts. It really means a lot to Ron and I. We really appreciate it, and it drives our business forward. Once again, guys, I'm Daniel Apke, joined again by my brother and business partner, Ron. Welcome back, Ron Apke.
Hey Dan, good to be here.
Before we start, let's go over one of the questions from one of our members over at Land Investing Online. Question is, as the market is changing, which it obviously is, guys, if you guys aren't paying attention to real estate, the market's changing, or just the economy in general. So as the market is changing, what percentage of retail value should we be offering on our letters? Um, that's a pretty broad question. I like this question, but there's so many different variables to it, and Ron's going to talk about that a little bit. But yeah, get into that, Ron.
Yeah, I think with newer people, this is one of the more common questions. It's like I'm ready to send my first mailer. Maybe I'm sending mail already. What should I be offering? What percentage? So let's say for you, those of you who aren't aware, so we send targeted letters with offer prices. Um, So should I be sending 40%, 50%, 30%? And like Daniel said, there's so many variables in this. I'm not really looking at it in terms of the market because I always want the offer percentage based on what the market, I think the market is or what the data is showing me. Hopefully as recent as possible. To answer the question, I can't just give a number, Dan. What we offer the most is probably somewhere in the range of 30 to 45. 45% is for higher price. It's not necessarily like different. It will be different markets at times, but if I'm trying to buy something that's worth $150,000, I'm probably not going to offer 30%, which is whatever $50,000. I'm gonna probably offer 60 to what I say 150, 60 to $70,000 would be my goal. So it really varies. Don't overthink this part. And I want to give you an answer that like you can't overthink it. There's no right or wrong answer, to be honest. You're going to get calls back. You got to do some negotiating and evaluate the deals when they come in. But don't overthink this part. I think 30 to 45% somewhere in there. If you're cheaper, so if you're sending mail that is priced at, if you're sending mail for properties that are worth $10,000, $12,000, don't offer 45%. You're going to have no margin after closing costs. If it's $10,000 to $12,000 market value, you should be offering 3 to 4,000, probably closer to three to be honest. So you can make 6, 7 grand. But that's the best answer I can give, Dan. I don't know if you have any other opinion.
And I think even more importantly than that, and what takes more specialization and practice, isn't figuring out what percentage, it's making sure your market value of what you pulled from your data is correct. So maybe you think the property is worth 100,000, but really that property is worth 150,000 and you're offering say 30% like Ron said. That's going to be 100. What's 150 times point 0.3? That's going to be $45,000 offer versus 30,000. So if you're really if your market value is incorrect at 30% there and you think it's 100,000, you're offering 30,000. But if you find out it's 150,000, you're offering 45,000. So that is really really important in my mind. Early on, and when we first started, we were offering a very low percentage in our market. We didn't understand how hot the market was at the time. And I remember we were up in some areas in Ohio, I think it was, and these markets were booming, and we are offering probably 50% of what the actual value was worth or less. So we are offering like 25% of half of the value. So I think that's even more important, is figuring out what that market value is. Practice that. That's what you should be working on. Don't work on what percentage is working or not. Find out what that market value is and get good at that, because that's where the specialization lies. That's all I have. Let's get into
Yeah.
today's topic, is why we don't option, or why we don't wholesale properties, and why we're not optioning. So let's start with what is wholesaling, Ron? Do you want to get into that?
Yeah, so wholesaling is essentially you get something under contract and you're signing that contract, you're selling the contract. Um, So let's say, so what we would be doing if we were, but people do it in or for houses a lot. So I'm going to give you a house example. Actually, let's say someone's buying a house or apartment complex, or so a wholesaler gets a apartment complex for $150,000. They think it's worth whatever $200,000. They're going to sell that contract to someone. So essentially, what they do, they'll sell the contract for $170,000 or something like that. It's still a good deal for the person who buys the contract. And then the wholesaler makes $20,000. So essentially, they're selling the contract to someone. Um, and in land, it would be the same thing. It would just probably be bigger margins for, I don't know, for the wholesaler. I think that's why it's not done in land more, along with the lack of competitiveness. But that's essentially what wholesaling is, Dan, to define it.
Okay, yeah, that makes a lot of sense. So we've actually bought properties from wholesalers, not in land, but in houses. Right off the bat, one thing that you do have to be careful on, and we'll get into some of the advantages and disadvantages in this episode. But one thing, right, that I want to say early on in this is you have to be careful buying because you got to realize the reason people are wholesaling is to mitigate risk, and they're not putting up their own money. So that means that they don't really care what that condition's in. They don't have risk. Their risk is virtually zero. I mean, they have no upfront money in it. So, like, I'm thinking if I was wholesaling land, all my crap properties that I don't like that or might be really tight margins, I might try to wholesale just to see what's going on with it. So that's why you have to be careful with buying wholesale properties. That's kind of opposite. But Ron and I have bought from wholesalers on our rental property aspect of things. Let's get into some since we're talking about that now, let's get into some of the advantages of wholesaling and options. Like I said, we've bought a rental property in Cincinnati from a wholesaler. But like I said, the main reason to wholesale, I think, in my mind, is there is no risk and there's no capital risk involved. Do you agree with that?
Yeah, I think not just risk is you don't need it. Like I think it's the same thing you're saying. But for people with lower funds, like you don't need much money to start because most of them do cold call. So you can start with little to no money, which is a huge advantage. Then you can sell those contracts and make $20,000.
Yeah, exactly. And so, like you said, there's no capital needed. That's probably the biggest thing, but that goes hand in hand with risk. And along with this, one of the main advantages I see in it from even a land standpoint is if I were wholesaling properties, you can take more price risk almost. So like when we're buying it ourselves, we're doing so much due diligence to make sure this is a good deal. If we're wholesaling, yeah, we're going to do a little bit of due diligence here and there. But that final price approval, like Ron and I have a stage called final price approval where we're looking at all the due diligence and information and then approving or declining it based on there or sending it to negotiation. If we're wholesaling that, I bet you over 50% of the ones we're declining from that point would probably be approved because they're like we can take more high I'm going to say higher risk, but it's not really because we're not putting the money up. But instead of having to buy it for 40,000, if it's $100,000 property, maybe we have it at 65 and we think we can get a wholesale assignment for 90 or something. But that's another advantage I see. Those are kind of the two main advantages I see. Ron, do you have anything to any of the advantages of wholesaling?
No, I think in terms of it just doesn't make sense to me with the land, Dan, to be honest. But Yeah, I'm trying to think as far as other advantages. I think that's the biggest thing, obvious, honestly, the capital up front and the risk, like you're saying. Um, but no, I think that those are the biggest things without a doubt. I don't want to make something up just to add a third thing. I think those are two huge components, and they're very attractive to people, especially when they're doing houses and stuff. I think not needing money up front is extremely attractive. Like Daniel said, you need to be careful who you're buying wholesale deals from if you're buying real property, not just land. Because you got to do your due diligence. They don't care. Like at the end of the day, they don't care. The good wholesalers do care because they want long term relationships with these buyers, with people who are buying the contracts from them. But these people who just get a deal here and there, like they don't care who is buying their contract. And with how hot the market is, people think, Dan, I think people think every deal they get off market is such a good deal. So if they're buying from a wholesaler, like this is a killer deal because I didn't have to buy on market and compete with all these other people. But realistically, that wholesaler probably has an email list of 50 people who are looking at it the same as you. Um, but you want to move on to options, Dan, or you have anything to add for that?
Yeah, well, I just wanted to say one example because, like Ron's saying, first off, wholesaling is very competitive in cities. I'm not saying with land. With houses, it is extremely competitive. I have letters coming to my house all the time on different properties we own, offering to buy my house in cash, and it's really just a wholesaler that's buying it and they're signing. But it's very competitive, and you have to realize, like to Ron's point, if Joe Schmo over here is an investor and he's looking to buy a house and he contacts a couple wholesalers, couple big wholesales in the area, and he's looking for a good deal, they're going to send him all the deals that they have and the prices and all that. But you got to realize Grant Cardone's in that same area, or someone like Grant Cardone, and they're sending Grant Cardone or whoever that big investor is all the good deals first, because they want to keep him, because he's buying 100 plus properties a year from him. They want to keep him happy. They don't want him looking anywhere else. They want to fulfill all his needs. And then they give you, the new guy on the block, or whoever, just a smaller investor, all the leftover fluff that they can't really sell to their main investors. I'm not positive that's always going on, but from a business aspect, I assume it is. So that's one other reason. But let's talk about options. So we've done this too, where we've optioned. It's like an option to buy. It is a sector of wholesaling, from my understanding as well. But that's where you're actually double closing. So you're finding the buyer, and you're going to the title company, and they're actually putting it in your name. And they can do, some title companies can do this on the same day also. They're putting it in your name, and then immediately after they put it in your name and deed it to you, they'll deed it to the end user as well. So you found the seller and you find the end buyer, and then you're in there as well. So it's going from A to B if you're B, and then from B to C, all in kind of one deal. Talk about that a little bit, Ron.
Yeah, so Dan explained it really well. So you're basically, this isn't assigning a contract. You are asking the seller, the original seller, for a 60-day option to buy, essentially. So you have 60 days to sell the property. Um, and this you're looking for the end buyer during these times. Let's say you're buying something, you have an option to buy something for $20,000. You think it's worth 35 or 40. Um, so you have that option to buy, and you're looking for a buyer for whatever those 60 days. You find someone at $35,000. You're going to find a title company that, like Dan said, can double close. So they're literally closing both sides almost simultaneously. Some title companies won't even make you put any money up front. Other title companies are going to make you send that $20,000. Then a couple hours later, you're going to get 35,000, which is still amazing. But so yeah, so you are lining that up with the title company, the seller selling to you, and then you are going to be the seller selling to the end buyer, and it's going to be two separate closings with the title company, opposed to just one closing with a wholesale. Um, and I think the way I'm wording this, Dan, like, it makes it sound like some amazing thing, and it can be very lucrative. Let's talk about the negatives of this. I think.
Yeah,
Do you have anything that comes off your mind?
yeah, I do. Well, first off, before we continue to talk about this, different states have different legal requirements. So if you're looking to wholesale and double close and options, just make sure to consult your title company or whatever and get some real legal advice, because especially on the marketing side of things, this can be a really gray area. So be careful. I know people have gotten burned before from this. Um, but the main disadvantages are, I think, number one, if you're wholesaling, these sellers want to find out who's buying this property. I get this question all the time on the acquisition side. People ask, "Are you buying this property? Who's buying this?" I think there's a lot less people willing to sell to wholesalers personally, especially since they have, a 90, 120 days, rather than us going in and saying, "Hey, we'll close this in 2 weeks." We we're buying this ourselves. So that's what I tell them. I say, "We're buying this ourselves and we can close within 2 weeks. It's going in our name, our business name." And then that kind of leads me to the second part, which is the flexibility to do to do whatever with the property. So if you want to make any improvements or whatever it is you want, and you can list it on the MLS when you buy it, you can just market it properly. Those are two of the main ones that I see, Ron.
Yeah, I agree with that for sure. The skepticism with those people, because the thing with option to buy, like, you have 60, 90 days, you have an option. Like, you could say no at day 59, day 89. And then they're just out in the cold. Like, what we try to do, and I think what our selling point is with our business model, is we are going to give you, like, you sign the contract, whatever, we're going to do our due diligence within 24, 48 hours max. And then we'll give you a straight up answer. Like maybe we have to negotiate a little bit down or something because there's a defect. But that seller knows as long as title work comes back and looks good, that they're going to get their money. Opposed to these options, especially with land, like there's no guarantee that you're going to be able to find an end buyer for that land. If it, and that's the problem. Like I don't see it as a service, Dan. I think that's my biggest thing. Like they might as well just hire a realtor and then maybe a realtor can sell it within 6 months. I see what we're doing as a service option and wholesaling, just trying to make a quick buck, honestly. Um, Unless you're extremely transparent with them and tell them that's the way we do it. When we have done an option or two before, but we're extremely transparent. Like, look, we're trying to resell this property. Um, I'm looking for a buyer. I'm going to post this up. I think I can, and we can make this happen. But be as transparent as possible if this is a game plan for you. Trying to think, Dan. But yeah, we like I've said, we've done it a couple times. You can make money optioning for sure. I just think it's a little. I don't think it's a service, Dan. I think that's the biggest thing for me personally. Why I don't want to dive deeper into it.
Yeah, and by service, I think what the main thing is just value. It's you're not adding as much value. So the less I look at it like the less value you add to the seller, the more money you have to offer, just about. Because like Ron said, if you have a 120, which is common, 90, 120-day contracts are common. If you have a 120-day contract with them to sell it, they can list this with a realtor and do whatever they want rather than we're coming in with cash, and we could be significantly lower than that 120 days, I bet, to guarantee 2 weeks cash, which is also a thing. And like Ron said, you're dealing with two sides closing. So you got to keep the seller, which is really important. So that 120 days, you got to keep him all 120 days if you want that. So you might have to be following up with them and doing all that kind of work. And then you have to find a buyer. So you're literally dealing with two sides of it, which just makes things more complex, less value. Um, I just think overall it's minimal value you bring into the world for land. I understand for houses it's a little bit different. But that being said, if you did put a lot of work into it and you have good buyer list, if you had a buyer's list in an area, say you're in Seattle, Washington, and you have a enormous buyers list and you're staying around the Seattle area and you can sell these properties in 1 to 2 weeks to investors in the area, that's value. I think that's high value. But you're going all over the country. You're going from Washington to Oregon to New York and going all over the country. You don't have buyers list. It's going to take you a while to find. You can't market it properly. I just think the value's not really there. So those are kind of the main reasons we don't like to wholesale is the flexibility. We like the flexibility to do what we want, market it everywhere, get it sold quick. We want to be able to put improvements on it if we want to, close it quickly, all that good stuff we talked about. And really just it's less likely to lose the property with buyers and sellers backing out. We're only dealing with one side and we're closing in 1 to 2 weeks. It's not 120 days and it's one side. It literally cuts the risk of someone backing out probably by over a quarter, I would think, or 3/4, I think. So maybe we should be doing this more. I think from a land perspective, I think the value is with those really tight properties you're unsure of, maybe this is a good option. Maybe you're going to say no if it's your money, and you just want to give it a try. I don't think there's much to lose. That's the whole reason for this. There's less risk. So maybe if it's a tighter property, you want to try it. Get permission, be as transparent as possible, see if you can market it. Don't give them 120 days. I mean, if you can't find a buyer in 60 days or so, I would probably start with 60, maybe even 30 and see what kind of traction it gets. But that's kind of where I would start.
Yeah, I think to close us out, I think, like you said, like being transparent. The first thing you would do, and this is what we've done when we've optioned, like it's like less than 1% of our deals to be transparent. But what we've done when those couple deals have happened, like let's say we sent a contract for 15,000, like something is wrong with the property or something, and we would buy it. Like the first thing you want to do before you option is telling them the price you would buy it for right now. Like trying to negotiate down a little bit. Let's say it's 15,000, you need to get down to 8 or something like that to make you feel comfortable. they might say like, no, listen, I'll just hold out for 15. And then you kind of throw them the option idea. Like, listen, I'm going to resell this. I can look for an end buyer. If you give me 60 days, I think I can get you that $15,000 in 60 days. Then hopefully you can find someone for 2022. You make 7,000, they get the money they wanted. And then the end buyer gets a piece of land that they wanted. So I think that's the first thing always, Dan, with options, like you telling yourself, don't just do it for any property where you just want to post up properties because you don't want to negotiate down and it's a crap property. Because that's what I see people doing and they're wasting time with it. When the price point makes no sense. They're at market value or something like that. But try to negotiate down first and then bring them the option to option, I guess.
Yeah, I think the main takeaway from this whole episode was just where does the value lie? And I really think our the way we do it, by actually acquiring ourselves and providing so much value to that sellers is a lot more sustainable. In land, houses might be a little bit different, but for land in general, think of where the value is. Um, I kind of, yeah, I just think that the wholesaling land, if you're not really strong in one market, is not a sustainable business in my mind. Maybe it's a secondary option, like Ron's saying. So maybe try one deal out. But would love to hear what you guys think and comment on this video. I'd love to hear you guys' thoughts on this because I know there's a lot more wholesalers out there in general than there are land flippers. So we might get some hate from this video. Honestly, I'm curious to see the response we get. But that's kind of our opinion. I know we're not always correct, but I do want to hear the other side as well from you wholesalers out there. But as always, guys, thank you for joining. If you got any value from this, please like and subscribe our YouTube channel, Spotify, Apple Podcasts, whatever you guys are listening on. Also, join or visit landinvestingonline.com. Join our free Discord where Ryan and I are involved. And other than that, guys, we'll see you next episode.
Thanks, guys.